Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, et guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-magdi.com. For all trade, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Alright, the title of this video is Forex Trading on the Edge, Part 5. We're going to analyze the Euro USD, the Euro dollar currency pair, okay, the USD yen, the dollar yen currency pair, the Australian dollar US dollar currency pair. But before that, I would like to refer traders back to the to the videos that we have recorded before. Forex Trading on the Edge Part 1, that's about the Euro USD. Everything else that we have discussed before, okay, regarding the Euro USD on the yearly chart is still valid. I will not repeat myself again about those key levels that we have discussed about the Euro USD in the video that we titled Forex Trading on the Edge, Part 1. In fact, traders should go back to that video throughout the year because it's a very, very important videos that the traders, Forex traders, must go back to all the time. Forex Trading Idea, Part 1. I would like also to refer traders back to the video that we call Forex Trading on the Edge Part 2. This is about the dollar yen currency pair. Everything that we have said before is still valid. Trader must note it down, okay, and go back to that video all the time if you are trading the dollar yen. I would like to refer traders back also to the video that we call Forex Trading Idea Part 3. This is about the Australian dollar US dollar currency pair. I have highlighted some key levels on the yearly chart. Our strategy that we want to adopt this year, the key level that we must watch constantly, okay, the key level that the professionals are watching. This video is very crucial for Forex traders, those who are trading the Australian dollar US dollar currency pair. So, this video that we are recording today, but Forex Trading Idea Part 5, okay, will add a little bit more to the video that we call Forex Trading Idea Part 1, Part 2, Part 3. Alright, so we are working together to continue this series of video, okay, talking about Forex trading. Now, before we continue, alright, do not worry, stay tuned with us. One thing we must understand, okay, so this Friday, if you trade, you should know we have a non-farm employment chain. This is what we call the daddy news. If you are trading Forex, the first Friday of the month, okay, if you are a new trader, you may decide not to trade at all. It's a very volatile economy news that will change the dynamics of the market together. That's why we talk about the trading triangle. If you have the best trading system in the world, but you disregard the economy news or the trading triangle, what usually happens, you will be going round. So, which means you make profit today, you make profit tomorrow, you make profit after the day after tomorrow, and you give everything back, and then you start again. You'll be going round because you refuse to be disciplined, you refuse to adopt the mindset of professional traders. Combine the technical trading with the fundamental. Check Google Finance, check Yahoo Finance, alright? Know when the economy news are due and what sort of impact the economy news may have on the markets. Does not matter whether you are trading stock, commodity, futures, or Forex. Alright? So, for next week, that is the week that is about to begin on the 10th of February 2014, alright? We need to know what's happening, okay? So, we will check ahead, okay? You want to know economy news that are due next week, what impact they will have on the market. So you are aligning, okay, your mindset with the professionals' mindset, okay. So you want to know when these news are due, so you do not expose yourself too much, all right, so to speak, okay. Let's go back to the core discussion today. Forex trading idea, part 5. We're going to look at the Euro USD, the dollar yen, and the Australian dollar US dollar currency pair. Okay, so going to close this page now. This is the Australian dollar US dollar currency pair. Going to start with the our kangaroo friends. Okay, the first level that we must watch is the short-term equilibrium price level is at 8868. 8868, 8,868. That level will remain in place for the next 14 days. Alright, so you want to know, especially if you are day trader, you want to know where is the short-term equilibrium price level. So here we are. I am the only one that know how to calculate this level. I'm giving it here for you for free. So the level is 8868. Alright, that's the short-term equilibrium price level. Alright, you must watch that level. Very important. Note it down. Why? Because the price is always going from A to B. Last time when we were recording a video about trading Forex trading idea, Forex trading on the edge, part 3, the short-term equilibrium price level was here. I want to show you here. Was exactly here. The price was not there that time. Look how the price went back to the short-term equilibrium price level that we were giving to traders at that point in time. These short-term equilibrium price level behave like okay, a magnet. Okay, when the price move away from this short-term equilibrium price level, the price sometimes, if there's imbalance, the price will try to go back to the short-term equilibrium price level, which is the short-term fair value for the financial instrument that we are discussing here. All right, so you want to buy something. All right, you want to buy a product. You want to know at least the short-term fair value. All right, because if you know the short-term fair value, that's very good, because then you will purchase it at the correct price. You don't want to buy it at the wrong price, or yes or no. Okay, so the short-term equilibrium price level allow us to make excellent short-term decisions, and also the price always moving from A to B, always moving from A to B. Yeah, it moved from here to here. Now then it went up from here to here. Then it went down from here to here. Now will it go up from here to here again? So the price is always going from A to B. If we analyze the Australian dollar US dollar currency pair on this monthly chart, we can see that the previous move was very bearish. So this is the length of the previous move. Then there was a rally. You want to understand the language of the price? This rally did not go above the 50% of the previous bearish move, which confirmed to us that the bearish momentum is still intact. But as the invitation was given to market participants, so to speak, they were selling here, but they were not enthusiastic as they were before. So the question mark is that, is this a bearish momentum diminishing? At this point in time, we can say it's diminishing a little bit because we couldn't achieve the same bearish progression as we did here. Like here, it was a shorter, a less enthusiastic bearish move. So we can say that as long as the price remain above the low of this candle here, this one here, all right, at 8660, and this candle here, this is the month of February, is bullish, or we can wait until this candle here is closed, because this is the month of February. It's not yet closed. So we can say, all right, we can wait until this candle is closed, and if the price could not display a new lower low, which is the low of this candle here at 8660, all right, we can be careful, and be a little bit bullish, all right, because of what has happened here and what has happened so far. But remember, this candle here is not yet closed. we must see this candle close fast before we can confirm this thing. All right. This is about the Australian dollar US dollar currency pair. So the short-term equilibrium price level 8860. We must also apply the trading idea part 2. TSTW24 traders know what I'm talking about. By the way, traders that are looking for trading robot, trading software, machine to trade for them should stay away from the TSTW24 because this is a mechanical trading system, a written trading system that active traders will learn and put into use using the trading triangle, all right, and learning to trade like a pro. Nothing like a software that will trade for you. If you're looking for software, go and search on the internet. It's not about TSTW. So the next key level that we must watch for the Australian dollar is the high of the month of this month here, the month of January. So we must watch the high of the month of January. We must also watch the low. These are the key level, additional key level, because the month of January is now closed. You remember? Must close is now closed. We must now pay attention to the high of the month of January, the low of the month of January, and the median line of the month of January. So apart from the short-term equilibrium price level at 8868, I'm telling traders, I'm recommending to traders to watch the level of 9086, note it down, 9086, that's the high of the month of January. The low of the month of January is 8660. All right? So, before we can say completely that the market, this bearish momentum is kaput, the price must display a new high, which is above the high of January. But we must also understand that if the price is above the median line of the month of January, so how do we calculate the median line of the month of January? So you know the high, you know the low. You use the high minus the low divided by 2, okay? So you will get the result plus the low of the month of January. That's how you will calculate the median line, okay, of the month of January. You can also use, okay, the Fibonacci retracement tool. You put it from the high of the candle to the low, and then you will select the 50% Fibonacci retracement level. That's the easiest way. Roughly, if I tell you now, is here, is somewhere, not exactly, but in the zone of 8881. It's near the short-term equilibrium price level, 8881. It's not the exact median line. By using the Fibonacci retracement tool, putting on the high and the low, and highlighting the 50% of the range of the month of January, the level is 8881. All right, that's roughly. But we can calculate the exact median line of the month of January by using the high minus the low divided by 2, okay, bracket, plus the low of the month of January. That will give us the exact, okay, median line of the month of January. So 3 levels we are adding now to everything that we have discussed in a video that we call Forex Trading on the Edge Part 3, talking about the Australian dollar US dollar currency pair. Now we are adding a new short-term equilibrium price level, 8868. That level will remain in place for 14 days, 2 weeks, okay, starting from Monday. All right, we want to watch that level carefully, okay? Okay, nothing magic about that level. We must always use, okay, a multiple time frame trading method. So you want to buy at a value support level. You want to sell at a value resistance level. We can also buy around resistance level, provided that the price breaks above it, retest it, and find a support. We can buy around resistance level. If that resistance level is violated, break above, retested around. Traders are looking for miracle, magic formula. They spend a vast fortune of vast amount of money looking for the magic one, instead of learning to understand the language of the price and just drawing the channel, the trend line, and using a multiple time frame trading method because the market is fractal. Do not make a trading decision on one single time frame. Trading is a simple game, but the economy news, the fundamentals can change the dynamics of the market constantly. This is where it becomes a little bit tricky. All right, so let's move on. So we know the key level, the media line, that's it. Okay, the high of the month of January. Okay, I can tell you again, it's at 9086. The low of the month of January 8660. The media line, okay, roughly is at the zone of okay 8881. All right, so you can calculate the exact level for the media. So the price always going from A to B. We know that. If it's going down, it will be in a declining channel, and display lower lows and lower high. And if it's going up, it will be in a rising channel. If it's not going up or going down, it will be in a horizontal channel. The market patterns. All right. So this is what we see. These are the key level because we want to know where the price is likely to go, where the price is likely to end up, the target level. So we want to know so we can navigate through this messy market. With this information, it's powerful, so we can use our trading tools around this key level, knowing exactly where the price is likely to go, what's going on, what's taking place, okay, together with the trading triangle. If we go now, okay, to the, okay, daily charts, we know our level because professional will tell you, know your levels and trade your levels. Did anyone ever told you that? Okay, know your level and trade your level. That's what they will tell you all the time. So you want to have a reason why you are buying and why you are buying there, the place and the time. Why are you buying it? Why do you think this is a high probability trade? Okay, you want to know why. So on this daily chart, this is what we are talking about all the time. You are using TSCW24, set up, signal, low risk entry point. Do not discount the economy news. Do not trade useless financial instrument. What do I mean by that? Financial instrument that do not move. They stay in one place one day. All right? Because they stay in one place one day. No one is trading it. It's not liquid. And you're just wasting your time going round. Do not trade them. Do not trade them. I mean, if you suit your trading style, but I mean, it's up to you. I mean, if you want to do that, okay. But it takes time. But okay. So on the daily chart is we have this declining channel. E break above, we retest it here, blah blah blah. And you see here, this is a bit funny here. You see, break above, retest, display a new lower low. This low went below it a little bit. We just stuck below. Okay, you see here. And now we are now above. Okay, so here we are. So we will see whether we're going to have another okay market or not. Okay. So this is what we see. It was in a declining channel before. Now it's out of it. So you want to buy, you want a bit of pullback, that would be nice. If you want to chase it, okay, always look on your left hand side, okay? Look on your left hand side, okay, to know what's taking place, okay? The next financial instrument is the Euro USD. As I say to Forex traders, the leading currency pair is the Euro USD. Now, sometimes a lot of Forex traders get into trouble because they do not understand the correlation between currency pair. They buy the Euro GBP, they buy the Australian yen, and they don't know how this thing works. And they get into trouble. You may take a value signal, and the currency may change direction because another leading currency pair is controlling them. Okay, so you want to know the correlation between currency pair. That would be very, very useful. For a leading currency pair, the Euro USD, the short-term equilibrium price level for the Euro USD is at 136.49. This level will remain in place for 14 days for the next 2 weeks, starting this Monday. 136.49. This is it. Everything else that we have said before in the video that we call Forex Trading on the Edge Part 1 is still valid. These are additional information. We are adding 3 more key levels. The new short-term equilibrium price level, and also we're going to go to the monthly chart. We must pay attention to, okay, the high. Okay, this is about the trading idea part 2 for TSCW24 traders. The high of the month of January. Okay, we want to pay attention to that level because the month of January is now closed. Okay, so the high is at 13775. So that's the second key level that we must note down. 13775. The low of the month of January for the leading currency pair is at 13479. You want to know those key levels. You want to pay attention to them. Trade professional traders, they know those key levels and they know when the price at the stations or not and what the price is likely to do. Now, I will refer to trader to calculate. Okay, so this is your homework. Calculate the median line by using the high minus the low divided by 2. Okay, plus the low. Alright? That will give you the exact level for the median line. But the quickest way to find it, if you don't want the exact level, you can use the Fibonacci retracement level like this. Okay, and just highlight it. Okay, something like that. And you look for the median line. It's the 50% Fibonacci retracement level is at 13629. 13629. Okay. Now this level is not the exact median line. If you want to the exact median line, you must use the high minus the low divided by 2 plus the low. That will give you the exact level for the median line. But using the Fibonacci retracement tool, the 50%, we can say in the zone, okay, not exactly, but in the zone of 13629. So apart from the short-term equilibrium price level at 13649, pay attention to the high, the low, and the median line of the month of January, which has been closed. This is about the trading idea part 2. Alright? Very, very important. Because if you are trading, you are day trading, you are swing trading, and you do not pay attention to this level, or you are using the area wave theory, area wave pattern, or any pattern, but these levels, that's where the price usually go to. A to B, A to B, alright? You want to know this key level. We have discussed other key levels in the Forex trading on the edge part 1, talking about the Euro USD. Alright, so this is how we want to trade this year. This is how you want to trade this year. Use your trading tool around key levels without violating, okay, the market patterns. So we talk about the trading drill, okay, the setup, the signal, and the low risk entry point. We talk about the market patterns, the rising channel, the declining channel, and the horizontal channel. We also talk about that the market is global, the market is fractal. That's why we do not make a trading decision. Go to 1 minute, 3 minutes, 5 minutes, just place a trade, forcing it, pushing it. Okay, that's not the way it works. Okay, multiple time frame trading method. Select the key levels. Here we are on the monthly chart key level. We can switch now, okay, to the daily chart. So the line that we have drawn on the monthly chart still visible here. You see my equilibrium price level, or the other line that for the monthly chart still here on my chart. I can see them. On this daily chart, what's the price doing here? The price is consolidating. Can you see it? It went up. You see, it's consolidating. There is a range here. So it's not a declining channel like we see for the Australian dollar. It's a range. So if you are trading and you do not pay attention to the market pattern, all right, there are 3 market patterns there, is that? So people, I mean, sometimes I'm talking like this for a reason, because the amount of money traders are wasting is crazy. And sometimes some traders don't realize that they are already in a mess, because maybe they don't go below 50% of their trading account yet, so they don't know that they are in trouble yet. But they are already in a down cycle. Okay, so that's why sometimes I know how it's like to lose money, real money, and how it's very disgusting, okay, to waste the real money. All right, so that's why sometimes I speak like this, and I say, "Just shut up," okay. But it's important to say this at early stage. The money management is part of trading. The trading drill, the trading triangle, these are part of the trading drill. If you go and speak to, okay, experienced trader, they will tell you exactly the same thing. Because when the real money is involved, especially if it's your own money, it's not your client money, your money also, that's what the hedge funds are performing. They have their own money in the phone. It's not like they're throwing people money away. So if your own money is involved, you care about it, and you try to have a proper system in place and do it properly. Unless you are trading with somebody else's money and you get your salary, you don't care. Then you throw it up and down, do every sort of crazy mistakes. But if your own money is involved, you want to get to the bottom of it, okay? So for on a daily chart, you see that it's horizontal channel, okay? Okay, so you see there was a range here before, this small range. Now we break above it. You see the previous range here on a daily chart. Now we have a new range again. It looks like a bit of a fractal pattern here, but I don't want to dwell on it. But so the euro is oscillating. So, but the median line is at 136. The short-term equilibrium past level is at 136.949. Will it come here? Okay, we will see. All right. Though we are in a horizontal channel, traders should not discount this trend line here on a daily chart. You see. All right. Do not discount this trend line here on a daily chart. So the bullish zone is this zone here. So if you want to be very, very bullish, allow it to come out here and to find a support in this section here. All right. But if you stuck below the short-term equilibrium past level, the music has changed. It's great. Watch the support level here. There's one here at 13445, and one below 13364. All right. So for the Euro USD, the level we are talking about is the short-term equilibrium price level at 13649. Okay. The high, okay, on a monthly chart. The low on the monthly chart, the month of January here, okay, and the median line of the month of January. These are 4 additional levels: short-term equilibrium price level, the high, okay, the low, and the median line of January. We must watch that level and pay attention to the market patterns, okay, and do not forget the economy news. All right. On this monthly chart, what's happening here? The euro was oscillating for a year. There was a trend line that I drew a few years ago. Let's see. I can't see the top of this section here. Yeah. If we draw this trend line here, so watch it. Okay, watch this trend line. So this is about the euro USD. The next financial instrument is the dollar-yen currency pair, which I like to call the crazy currency pair. In fact, I give some names to some currency pair. I call the Australian dollar US dollar currency pair the slippery currency pair. Slippery, all right? So you want to hold it tight and get it right with the Australian dollar US dollar currency pair, because it's a slippery currency pair. The USD yen is a crazy currency pair. Some professionals do not trade this currency pair because of the characteristic of this crazy currency pair. All right. For the dollar yen currency pair, okay, the short-term equilibrium price level is at 103.08. That's the turquoise horizontal line here. That's the new short-term equilibrium price level. That short-term equilibrium price level will remain in place for 2 weeks. After 2 weeks, we will calculate a new short-term equilibrium price level. So note it down, 103.08. Okay, that's the horizontal turquoise line here. The next key level, you should know it now. On a monthly chart, we'll highlight the high, the low, and the median line of the month of January. This is about trading idea part 2 for TSTW 24 traders. The high of the month of January is at 10544. Note it down, 10544. That's the high of the month of January. The low is at 10176. Note it down, 10176. That's the low. The median line, we must use the high minus the low divided by 2. The result that we get plus the low. High minus low divided by 2 plus the low. That's the formula to calculate the exact level of the median line of the month of January. But if you want to get it quickly, you can use the Fibonacci retracement tool, highlight the high, okay, and the low, And roughly, we can say it's in a zone, where is it? It's in a zone of a 103.56. 103, okay, 56, okay? That's for the dollar yen currency pair. Okay, so 4 key levels we are adding to everything that we have discussed in a video that we call Forex Trading on the Edge Part 2. So you can go back again and watch Forex Trading on the Edge Part 2. In fact, what I'm doing this year, I'm putting the information there for traders, okay? And traders that are serious about trading will know what to do. And they will benefit from it. In fact, we receive a lot of I need to post those email on our website, a lot of email from traders. Thank you, okay, which is great. So those thank you, those like videos, those things, okay, encourage us to post more video for traders. All right. Okay. So short-term equilibrium price level 103.08, 103.08. All right. The high of the month of January 105.44. The low of the month of January 101.76. The median line roughly using a Fibonacci tool roughly at 103.56. So this information we get them from the monthly chart. Now if we switch to the daily chart, do not violate what the market. This is the line we draw before. Okay, you see here we are out of this channel, and since then we are stuck in a new declining channel. Okay, you're going to choose this point to make it parallel to the first one, which is a bit tricky now. So my line, if I draw it parallel, will be something like this. So I hope my drawing is correct. Alright, so this one we have joined this point and this point. Allow me to draw my first line, and I choose just this point here to make it parallel to the top one here. Okay, that's where we are now. Okay, on the daily chart. So on the daily chart, the price came out of this rising channel. You see how the market pattern is respected all the time. Now you see this channel was intact. Now we are out of it. We go to a new channel. The channel. If you are fighting the channel, you are likely to lose. All right. The channel is a market pattern. Use the TSCW34. Use the TSCW-SYZ08 with the market pattern. The next thing, pay attention to the economy news. Understand the trading triangle. This is what makes the difference between a professional trader and ordinary traders. Professional, they are using, okay, the trading triangle to remain in the market. Otherwise, they're going to lose their job and they don't have any future. So, the market first, the sector before the financial instrument, market leaders, economy news, and fundamentals. They don't violate those things. If you do that, okay, and your supervisor call you, I mean, they can throw, okay, a pen at you or something, all right? Or use some F word, all right? Have you ever worked in a kitchen, all right? So trading, I mean, it's like working in a kitchen. In the kitchen, the chef, they swear a lot, they throw pans at each other, and they want it to be done on time when orders are coming out of the kitchen. Have you ever worked in the kitchen? And busy time, the orders are coming, and the chef that is the leading chef will be giving orders to the other chef. This menu, this menu, this menu, how long? Bring it now. And the pressure is building. And the orders are coming out. Orders are coming out, and the pressure is building. And this head chef is barking orders to other chefs in the kitchen. And there is also the big chef, the chef of all the chefs. Now, the next day, when he come in, he will go, the manager will say, oh, there was this complaint, there was this complaint, and he will call the head chef, and the head chef has to perform. The same thing in trading. When the market starts moving and orders are coming in, orders, buy, sell, orders are coming in, the pressure is building. But something remain intact. These are the market patterns. They remain intact. But if you are making mistakes, you don't want to make a mistake by violating the market pattern. That's all. So for the the dollar yen, we have said more thing before in the video that we call for Forex trading on the edge part 2. Trader must go back to it. I have also recorded a video about alien wave trading. I highlighted 2 key level 9000 and also the level of 8400. Alright? So apart from everything else that we have discussed, talking about analyzing the dollar yen, talking about alien wave trading, okay, trader can go back to our YouTube channel, 24 alien wave channels, okay, and watch the video about the dollar yen. But for what we are discussing today, for the next 14 days or so, or this month of February, the high, the low of the month of January, and the median line of the month of January, plus the new short-term equilibrium price level for the dollar yen is at 103.08. On this daily chart, you can see the price now in a declining channel for the dollar yen. Okay, so be careful, okay, don't fight the market. Another thing I need to mention, though I'm speaking at this, I'm very serious. Do not forget the median line. I don't like to draw the median line. I'm just aware of it, okay? So just be aware of the median line also, okay? Be aware of the median line of the channel. Be aware of it, okay? So if, for instance, you are so desperate to buy in a declining channel, at least allow the price to go above the median line of the declining channel. So if the 5 find a support, you are very, very desperate to violate the market principle carefully, please, if you want to buy above the median line of the declining channel. I don't want you to get into that trouble. What's the point? Okay? But for day trading purposes, one can get away with it, okay? Alright, so be aware of the median line. This is about the Forex trading on the edge. Part 5, we have discussed the Euro USD, the new short-term equilibrium price level, which trader must remember for the next 14 days at 136.9. We also say to traders to watch the high, the low, and the median line on the monthly charts for the month of January for the Euro USD. The Euro USD is the leading currency pair. The dollar yen, same thing for the month of January, the high, the low, and the median line. The new short-term equilibrium price level for the dollar yen is at 103.08. We have also analyzed the Australian dollar US dollar currency pair. The short-term equilibrium price level is at 886H. One must also pay attention to the trading idea part 2. I hope you have learned something from this video, okay? And I will put into use, okay, to make excellent a day or swing trading decision. As always, if you are TST trader and you have any question, do not hesitate to contact us, and we will get back to you. Speak to you soon. We are the TSTW 24 traders. Happy trading to you all.